Good morning, good afternoon, good evening, ladies and gentlemen. It is indeed a massive pleasure and a privilege for me to be speaking at the Sudan Fintech Summit today, and my sincere appreciation and thanks to the organizers of the Sudan Fintech Summit for inviting me to share my views today with you on the challenges posed by, or the regulatory challenges posed by crypto assets. Perhaps just in terms of the normal disclaimers, the views I share today do not necessarily represent those of the South African Reserve Bank, but are my own. Given that we've only got a short 15 minutes today, I will get into the meat of the subject matter as soon as possible. So without any further ado, I would like to position the regulatory challenges posed by crypto assets in terms of three overarching reasons for that being the case. But not only around regulating crypto assets, but regulating crypto assets appropriately so as not to stifle innovation, but also not to introduce undue risk into the system. These three reasons I broadly refer to as the trilemma of crypto asset regulation, or the regulatory trilemma posed by crypto assets. Firstly, we've got crypto assets' unique ability to perform different functions, but not only perform different functions, their potential to do so both concurrently and seamlessly, to perform cross-cutting activities, therefore requiring the involvement of different regulators, potentially, and subjecting them to different pieces of financial sector legislation and laws. The second reason, in my view, why I think crypto assets are challenging and continue to be challenging to regulate is that the existing or the legacy laws and regulations don't always fully cater or appropriately cater for financial innovations such as crypto assets, and they were often drafted decades before the advent of such innovations, and reconciling them at times continue to prove a challenge. The third reason why crypto assets are challenging to regulate, in my view, is that we've seen ongoing and rapid evolution of the broader crypto asset ecosystem, and that continues to pose new questions to regulators. So getting to the first challenge around why crypto assets are challenging to regulate, I think is around the ability to perform different functions. So if we look at the top 10 crypto assets by market capitalization, they've each got slightly, or they've got potentially quite different value propositions and different problem statements that they're trying to solve for. So again, just looking at the top 10 crypto assets as of today, and according to market capitalization, they've got the ability between them to function as a payment instrument, both from a domestic and a cross-border perspective, a payment system, including the associated clearing and settlement activities. They may be used for investment purposes, similarly for the pooling of investments, similar to a collective investment scheme, or through the staking of crypto assets in a return for rewards in crypto assets. Capital raising through ICOs or similar initiatives. They may function as a security potentially, or as an international remittance instrument. They may also perform some bank-like activities in the form of allowing or offering the ability to receive interest payments on your crypto assets held in safe custody, almost very much in the guise of deposit taking, similar to a bank, but again with the caveat that it is specifically from a crypto perspective. If we then throw issues such as consumer protection, advisory services, the credit component, money laundering, terrorist financing concerns, competition, and issues surrounding tax and fraud, if we throw all those elements also into the mix, we sit with a phenomenon that cuts across a very broad range of financial activities and services indeed, and therefore subject to potentially a vast range of different laws and regulations. So what regulatory challenge does this give rise to? So, and every time I do a similar presentation, I am intrigued by the number of new crypto assets that have emerged over the last few weeks. So when I had a look this morning, there are currently more than 11,000 unique crypto assets in existence. Maybe just to add that even though the more than 11,000 crypto assets do not each necessarily have a truly unique value proposition, for the most part, each crypto asset or project tries to solve for a relatively unique or nuanced problem statement. So as a result, and kind of with all these activities that they can potentially perform potentially concurrently, a blanket classification and a subsequent regulatory treatment thereof is neither appropriate nor possible. So, for example, not all crypto assets can be classified as a payment system or payment instrument or an investment or security. So, too narrowly defining them under one kind of blanket definition is not appropriate, with the associated challenge of that not then being fully captured under the appropriate regulatory instrument. And so I think equally then on the other side or end of the spectrum, regulators cannot draft bespoke regulation for each crypto asset. So a balance therefore needs to be found to provide sufficient guidance or for the regulators to have the ability to strike an appropriate balance between the uniqueness of a crypto asset and balancing that with the kind of activities-based approach that most regulators across the globe have adopted. The second challenge of crypto assets is that posed by legacy laws and regulations. So just for context, crypto assets' original value proposition was very much around decentralization and disintermediation. So that kind of contrasts quite starkly with the existing financial system, which has, for the most part, developed very much around this centrality of some type of intermediary, whether that's a bank or payment providers or remittance provider. So the challenge that crypto assets pose is, from a legacy law and regulation perspective, the existing legal and regulatory framework has largely evolved around this focus on intermediaries. And kind of given crypto's decentralized and disintermediated value proposition, it doesn't perfectly reconcile back to the existing framework. So I think, as I've mentioned, the existing legacy laws and regulations have all been drafted long before, potentially in some instances, even decades before emerging financial innovations such as crypto assets were even a conception. So that leads to this challenge around trying to fit a square peg into a round hole challenge. So if we've got crypto assets that were designed to be natively and exclusively both digital and borderless, how do we reconcile it with frameworks that often had physical money moving across physical borders in terms as a point of reference? So what regulatory challenge does this give rise to? So around the question of how best to treat financial innovations, there are essentially two options. One may either issue new legislation or amend existing legislation. While keeping in mind, how do we ensure a level playing field in accordance with the principle of same risks, same rules? So using South Africa as an example, like numerous other jurisdictions, we have adopted an activity-based approach, looking at the underlying activity performed and regulating that activity in terms of the existing legal and regulatory framework. And then by extension, only considering amending the existing framework if the activity is not appropriately catered for under the existing legislation. Again, that poses a further challenge in terms of the fast-moving and rapid nature of innovation that we're seeing, especially in the crypto asset space, and the almost invariably slower-moving processes around amending or effecting regulatory amendments. The third challenge around why crypto assets are challenging to regulate is that, as we've observed from the release of the Bitcoin white paper a bit more than 12 years ago, the market or the crypto asset ecosystem has proven remarkably resilient. So shortly after the issuance or the mining of the Bitcoin Genesis block in 2009, we saw the first of the altcoins or the alternatives to Bitcoin being released or issued shortly thereafter, again trying to solve for nuanced value propositions, but particularly around the speed of transactability and the cost. Then in 2014, we saw the first of the kind of first generation stablecoins issued. Also in 2014, we saw the first central banks starting to mention that they are considering or exploring potentially issuing their own central bank digital currencies. Subsequent to that, we saw the ICO boom in 2017 with numerous instances of market abuse being well recorded. And then also we saw later in 2017 that stablecoins emerged as the preferred trading pair going into 2018. Then also Libra, now known as Deem, was announced in 2019, rebranded to Deem in 2020. And also in 2020, I think almost as evidence for the ever-growing pace of change, we saw a massive growth in decentralized finance, or DeFi, and also we saw institutional investors coming into the crypto asset market space from 2020 going into 2021, and then the well-recorded I think media coverage that artist people received through the selling of a non-fungible token, and then also or NFTs, and then also the rise of tokens or tokenized shares. So I think just to almost make the point that we've observed significant and almost an ever increasing pace of change, and that stands in stark contrast to the ongoing and rapid developments in the crypto asset ecosystem, and then almost the slower process of legislative and regulatory amendment. So I think the crypto asset ecosystem has had to overcome various challenges over the last 10 years or so, which they've done with varying degrees of success. Including issues such as volatility, scalability, 51% attacks, functionality, adoption, speed, cost, interoperability. But I think nevertheless, the point is that the crypto asset ecosystem has proven remarkably resilient more than 12 years after the mining of the Bitcoin Genesis block. So maybe just to recap before I close, I think with crypto, we've got a really fascinating and interesting phenomenon that firstly may perform different economic functions depending on both its design and use, and indeed ongoing developments within the broader ecosystem. Secondly, crypto assets are often not explicitly captured in legacy laws and accompanying rules, whether either from an enabling or prohibitive basis, thus not providing at all times the perfect legal and regulatory clarity. And then thirdly, I think crypto assets continue to evolve at a fairly rapid rate, as we've observed over the last 10 years with developments related to stablecoins, DeFi, NFTs, tokens, and the like. So in closing, I think it is the combination of the three overarching crypto asset regulation that make crypto assets both interesting and challenging to regulate, but not only regulate, to regulate appropriately. So the discussion of how best to do so, however, probably remains the topic of ongoing debate and potentially something for another day. So with that, thank you again for the opportunity to share a few thoughts with you today. And again, thanks so much for the opportunity and privilege to speak to you today. With that, all the best and goodbye. Thanks so much.